With the limited data that we get during the longest government shutdown now on record, we did get some information today about the labor market. It is Wednesday, November the 5th, and this is Markets with Megan. If you like this podcast, please subscribe. You can hit that alarm bell, share with your friends, family, or colleagues. But we're here today to break down some economic data, and unfortunately, as I mentioned, the government still remains shut down. This is the longest shutdown on record, so we're not getting a lot of economic data, but we are getting anything from any private reports. And what we saw today was the ADP payroll report. This is for the month of October, and we did see a little bit of stabilization here. Again, it's just 1 month. ADP actually is going to start releasing some of this data on a weekly basis, but this is the monthly report. It showed that the private payrolls rose by 42,000 for the month of October, and that's after seeing 2 consecutive months of decline. So there's some optimism here that maybe we're getting a little bit of stabilization in the labor market. That would be great news, but let's not take 1 month as a trend. And let's break this down. Unfortunately, what we're seeing is that this was completely created by large businesses. So those employing 500 plus or more. The small and medium-sized businesses actually saw declines. Small businesses actually shed payrolls now for 5 out of the past 6 months. So this is important because small and mid-sized businesses are a big employment generator for our country. Now, what we saw was the majority of this was led by the service producing area. And when we break this down, what do we think that is? That's probably some of this AI spending that we're seeing that's filtering into these payroll additions. It's not necessarily, as I mentioned, the small and mid-sized businesses that are creating jobs. That's all we have on the payroll front. If you like this podcast, please, you can go back to any marketswithmegan.fm. Thank you.